So thank you everyone for joining us this afternoon. My name is Chris Jansen, Director of Client Services for Innovate Niagara, and we're happy that you could take an hour out of your day this afternoon to learn about Shred and how to maximize your Shred strategy. So before we get started, I'd like to just briefly introduce Innovate Niagara as an organization, what we do, and then I'll pass it off to Lauren for the contents. Innovate Niagara is a regional innovation center. So we predominantly serve the Niagara region, but we provide business supports for people in the innovation and technology space who are looking to commercialize new products, services, and technologies. So whether that's market research, access to funding, mentorship, training, or workshops such as this, we provide services at no cost to kind of innovative and technologically oriented entrepreneurs. So feel free to check out our website afterwards if you'd like to learn more. But I'd like to welcome Lauren Valliere, who is co-founder and managing partner of GrowWise Partners, who's going to be speaking to us this afternoon about Shred strategies and some of the changes that might be or that have taken place over the past year. So just one word of it, maybe an administrative item, that we will be having Q&A at the end. So there is a chat box or a Q&A function on your Zoom screen. So feel free to put questions in there and we'll get to those at the end of today's presentation. So welcome, Lauren. Thank you. And I'll pass it over to you.
Thanks so much, Chris. I appreciate the intro, and definitely check out Innovate Niagara if you haven't already. It's a great organization. Alrighty, so thank you guys all for attending today. Today we're going to be talking a lot about Shred and how to maximize Shred in 2026. I keep saying 2025 still, so if I say 2025, just ignore me. But yeah, the session is going to be all about, what we can do now to make sure our claims for 2026 are going to be as large and as strong as possible. And so, as Chris mentioned, I'm the co-founder and managing partner of GrowWise. We're a Shred tax credit consulting firm, so we help businesses access the Shred funding. I'll explain a little bit more about what we do later on, but I definitely have the expertise to speak about Shred. It's all I do every day. So let's dive right in. So a little bit of an agenda. We're just going to be doing kind of a Shred 101 session just to make sure everyone's kind of starting on the same playing field here today. Then we're going to talk about some of the 2025 rule changes. There was a really significant update to the Shred program in the end of 2025. So we're going to talk about what that means going forward and how we can all take advantage and make sure, our claims are as large as possible going forward. The third point we're going to talk about today is Shred documentation, which is where a lot of founders get stuck and where their claims end up not being as large as possible or as strong as possible. And then we're going to talk about some common mistakes and Shred for scaling companies and really how we can take advantage of Shred as companies grow. Okay, so I'm going to do a quick poll just to gather a bit of information on where you folks are at with Shred, to see if you've done it before, if you're currently filing, if you filed in the past. So you should have just seen a question pop up on your screen. Okay, I'm seeing some people pop in answers. If we could just all put our answers in here, that's great. Okay. Awesome. Okay. Okay, just waiting on a few people. Just give it another moment here. If you could just pop your answer in the poll here before we get started, that would be great. Alrighty, so seeing a little bit of both actually, or a little bit of all sides. So quite a few have never filed before, so that's kind of what this Shred 101 session will be for. But also we have some people filing in previous companies, currently filing internally or with a consultant. So a good range. And there will be something, hopefully for everyone to take away from the session today. So yeah, that's really good to know. Thanks for participating. Awesome. Okay, so if you filed Shred or you're currently filing Shred before, feel free to tune out for a little, 5 minutes here while I go over the basics. I just want to make sure those that have never filed before really understand the program before we get into too much of the weeds. But, feel free to check an email or do this or that on the side if you're already aware of these facts. I don't want to repeat anything you already know, but this will just help us all get on the same playing field here. So a little bit about Shred. Shred is Canada's largest tax credit. So it's over $4 billion annually to Canadian businesses, innovators, and entrepreneurs across Canada. It covers, so it's a reimbursement after the fact. So you apply for Shred with your business tax filing at the end of your fiscal year, and it's a reimbursement. And it covers salaries, contractors, material costs, and now because of the changes, capital costs are eligible again. So I'll get definitely with a lot more detail later on, but this is kind of a high level for right now. So the way that Shred works is as long as you're an incorporated business in Canada, you can get a cash refund for up to 2/3 of your eligible research and development costs. So that's the 2/3 of the salaries, contractors, materials, and capital costs. And it is a cash refund. It gets directly deposited back into your bank account. If you owe the CRA money, they of course pay themselves back first, but in most cases, it just comes back as a purely cash refund. So it's extremely lucrative for businesses in Canada, and that's why it's the largest tax incentive in Canada. And really, what the program is meant to do is fund innovation and technical problem solving in Canada. In order to be eligible for SR&ED, everything has to happen in Canada. The company has to be Canadian. All the workers and all the contractors have to be in Canada. And it's really the goal of the program is to keep that innovation in Canada and not outsource it to another country. So a bit more on who's eligible. So as I mentioned, it's exclusively for Canadian companies. In order to receive the refundable tax credits, you do have to be an incorporated company, and all work must take place in Canada. So your employees must be located in Canada, any materials must be used in Canada, any contractors must be located in Canada. Everything, I'm going to say Canada a bunch, but everything really has to be in Canada. That's the whole point of the program. And so a little bit about, who's eligible is you have to be spending money. Because SR&ED is a reimbursement, oftentimes I have founders approach me and say, I'm doing all this great work, but I'm not yet paying myself a salary. Or I have a buddy doing this work for me on the side and I don't pay him. Unfortunately, because of the way that the SR&ED program is set up, if you don't have any expenses, there's nothing to be reimbursed for. So you have to have expenses. You must have, salaries, material, contractor, or capital expenses related to your projects. You can be in any industry. So, SR&ED supports companies across all spaces, across all industries, a lot in the tech and software space. But we also support, and SR&ED also supports companies in pharmaceutical, manufacturing, truly any sector. We actually have a company in the food sciences sector that are doing some research and testing on different food and sort of gluten levels and that sort of thing. So, truly, it can be in any industry, in any sector. And really, the core of SR&ED is to fund problem solving. So it's not just for funding all research, all work, all technical work. It's really specific to the technical challenges where there's problem solving and a specific technical challenge. So that's what I'm going to talk a little bit more about now. So what work qualifies? Within a business, there's going to be potentially work that qualifies for SR&ED, but also typically a lot of work that does not qualify for SR&ED. Anything routine or standard or the maintenance or kind of doing, implementing off-the-shelf solutions, building something that's been built before, these kinds of things like, building a website, building a database, these kinds of things that aren't innovative, even if they might be challenging, they're not typically eligible for SR&ED. SR&ED really involves projects where there's a creation or improvement of a product, process, or technology. The work needs to be experimental and systematic. So it can't just be, a challenge. You try something, it works. If you try something the first try and it works, that's not really meeting the criteria of SR&ED. It needs to be experimental in the sake of there's a problem, you have to try something, iterate, hypothesize, test, retest, experiment on that problem to get to the solution. You don't actually have to solve the problem, but you do have to learn lessons. And so this is specifically for technical problems, not business problems. Excuse me. And what we say at GrowWise is SR&ED funds the struggle. So it's bad to say, but anytime there's that struggle where like you don't know how to do something, there's a really, significant challenge. It's taking months of effort from you and your team, and you're trying all kinds of things, you're failing, you're iterating, you're hitting roadblocks and overcoming them and trying different alternative methods. That's really the core of what SR&ED is meant to fund. So those are the projects. Within a business, when you apply for SR&ED, there will be typically multiple different projects for each business within each application. And the projects revolve around a specific technical uncertainty. And those technical uncertainties have to require that experimentation and investigation in order to qualify for SR&ED. So on the expenses, I did mention a little bit earlier, but salaries for technical employees, that's typically developers, engineers, designers, project managers, contractors or consultants, any third party within Canada that's paid to solve this problem or do research or do testing, anything that relates back to that core technical uncertainty. So if you contract out some specific work, this can be routine, this can be development work, this can be an engineering firm. As long as that work relates back to that core technical challenge, then it's going to be eligible into that project. Materials used or consumed in testing. So I get a lot of software companies asking me like, are server costs, are, subscription costs eligible as a material? Unfortunately not. Materials specifically in the CRA's mind is physical goods used in testing. So we have a company that's doing using robotics to help build and frame homes. So they use a lot of wood in building their robotic systems. And that wood that's, used up and tested and, they put a million screws through it, that becomes wasted at the end or, potentially recycled, but that's not getting sold as a product. So that cost of that material would be considered an expense for shred. And then the new exciting change is that capital expenses are now eligible. So that means that I'll get into this a little bit in the next couple slides on what the changes are. But capital expenses that are specifically used for testing and experimenting. So this can be machinery, it can be equipment, and that they're used specifically for the context of executing a shred project. But I'll explain a little bit more about that in the future. A couple examples of eligible work, because sometimes this can be a little hard to specifically understand. Within software companies, that could be something like addressing larger security challenges when building a custom software, or improving algorithms to process complex data sets in a new way. So these aren't things like little bugs. They're not like a new feature. It's those larger challenges that really do require typically months, if not years, of iterative problem solving to get to a solution. Within manufacturing or hardware or agriculture, ag tech companies, that might be building or refining prototypes to evaluate specific technical feasibility or, performance at scale. It also might be designing custom hardware or devices to solve challenges existing tools can't handle. So these projects and all shred projects have three things in common. There's a technical challenge, is an iterative problem-solving approach, and there's lessons learned. Even if you don't succeed in meeting the goal, like you want to achieve, an improvement of 5% and you only achieve an improvement of 2%, if you learned lessons along the way of what worked and what didn't work to achieve that improvement, then that would qualify for shred. So a bit more on the timelines and the deadlines of shred. So projects need to be documented throughout the year. I'll get more into documentation in a minute here, but you're documenting throughout the year. At the end of your fiscal year, everything with shred revolves around your fiscal years for your business. The end of your fiscal year, you'll prepare a shred claim. And that's really where we come in as shred consultants, is to do that work to prepare the shred claim. Filing your shred, I would always recommend filing with your business taxes at the end of your fiscal year, which is a 6-month deadline after your fiscal year ends. But with shred, there is actually an 18-month deadline. So if you missed a previous application or previous filing, if your year end was within the past 18 months, it's not too late to go back and file for shred now. So we do that sometimes if companies didn't know about shred. We'll go back and file. For example, if you have a December 31st year end, you're still able to file for your 2024 year as well as your 2025 year. But always, once you get into the process, apply with your business taxes at the end of your year, because it will make the process much faster from the CRA's side if you don't have to go back and amend the tax return. So, and then typically the CRA processes the shred refund within 2 to 5 months. And just a little bit about a common question I get. So people always hear about shred audits or shred reviews. They're the same thing, a shred audit or shred review. People always ask me, or they get really nervous, like, is there a high likelihood of getting audited? What does that entail? Is that a whole business audit? So in about 10% of cases, the CRA will actually audit the shred claim. In the other 90%, you submit the claim, the CRA approves it without any further questions or further documentation. But in about 10% of cases, the CRA will come back and say, okay, you've been selected for a review. You need to provide us a bit more information about the work that you did. Sometimes it's just a financial review, sometimes it's a technical review, sometimes it's both. In either case, they'll ask you for some more information. That might be, some proof of the work that you did, some proof of the tests. That might be proof of documentation to show who spent what time on this project. They might ask for specific invoices from a contractor. So it can be anything, but really the point of working with the shred consultant is that we're right there to support you through that audit process, and that we're actually, submitting a claim that won't get audited in the first place. And if you do get audited, we're there to, make sure you have all the documentation ready. So in about 10% of cases that happens, but in 90% of cases it's smooth sailing and you just get the cash refund within about 2 to 5 months of the shred filing. Okay, so that was the Shred 101. So if you tuned out for that, tune back in now. Now we're going to talk about the 2025 Shred rule changes and some of the exciting news that the federal government released in November, December 2025. So there's a couple main changes. The most exciting being that capital expenses are now considered Shred eligible. This is really significant for companies such as manufacturing companies, ag tech, biotech, pharmaceutical companies, or anyone that really has to purchase equipment or machinery in order to do a shred project. So you do still have to be able to fund that equipment upfront because the way that shred works, it's an after the fact refund. So you do still have to be able to purchase that equipment or machinery upfront. But as long as it's used 90% or more for shred related activities, then you're able to receive a refund for about 40% of that capital cost. So it's very significant if you're buying like $1 million piece of machinery to be able to do testing. You get $400,000 back at the end of the year through Shred. The key to this is documentation. You need to be able to show that the equipment is used specifically for testing and specifically for that shred activity. So, for example, if you purchase a piece of equipment and then you buy it, there's a bit of setup, but then you're just using it on your production line for, a running operation. That's not going to qualify as a shred expense because it's not actually being used for testing. It's not used for experimenting. Whereas if you need to purchase a specific equipment in order to be able to test, for example, the performance or durability of a specific component within your company or within your business, and that equipment was actually exclusively or 90% or more used for the sake of testing, then that capital cost is going to be eligible for shred. So really documenting what that machinery is used for and what tests and what iterations and challenges are being faced with this machinery. That will be the key to getting it included in your shred expense. The second really exciting update is that there's higher limits. So for those of you that are already claiming, or potentially, for some of you that haven't claimed yet but are going to be scaling your companies significantly, the shred expenditure caps are increased, which is less relevant for small startups because it's once you get into that several $1 million shred refund, that's really when these benefits come in. So it's more so for the scale ups and enterprise companies. So I'm not going to go into too much detail today, but if you have any questions about those expenditure limits or increases, just reach out. But yeah, it's really beneficial for those larger companies with usually more than $1 million in shred. And then the last exciting update, there's many, but some of them are quite small and nuanced. So the third kind of large update is that there's going to be a pre-approval process, which is going to be coming out in April of 2026. So I don't have all of the details on that yet, but it's going to increase the confidence if you're able to submit a pre-approval. You'll submit a pre-approval before the project starts, almost like IRAP, if anyone's familiar with that funding program. That's funding where you apply, you get the confirmation that you're eligible, and then you go spend the money. It will almost be like that, where there's an opportunity to actually apply for shred, get pre-approved, and then go spend your expenses so that you're going to get a certain amount back on those expenses. You're not kind of going into it blind. I don't know that this will be super valuable because that's really the point of shred consultants to begin with, is actually being able to say whether or not this project or this expense will be eligible. So I think most companies are kind of already knowing whether their expenses are eligible before they start. But if you are someone who wants, that extra level of security, this will potentially be a good opportunity to just have that extra confidence before your expenses are incurred. So more details to come on that, and we'll definitely post some news and some articles about that once it comes out. But yeah, those are the three really exciting rule changes. I'm going to talk a little bit about how to take advantage, but the key to all of this, and really the key to maximizing your shred, is having documentation in place and having systems to document and track your shred projects. So there's three key questions the CRA needs you to be able to answer in your shred claim. And this is the kind of component that we come in and we digest all of the information of what your company did throughout the year and answer these three questions for the CRA. So what is the specific technical challenge or uncertainty? So it couldn't be resolved by industry standards. There's no SOPs available in the market. There's no off-the-shelf solution that you could have paid to do this. So there has to be a specific challenge. And what was it? And how did you know it was a challenge? Like, you have to show that, there's not an existing solution out there that can do this. And then second is, what tests, experiments, and failures did you do? So you have to be able to prove that there was that iterative process where you experimented, you failed, you iterated. So this can be, lines of code. This can be GitHub commits, Jira files. This can be ClickUp documents. This can be like scrap notes on a piece of paper. This can be test documents. All of these questions can be answered in any format within your business. You just really need to be able to answer these questions from kind of all of the pieces of the puzzle together. And the third is, what did you learn from your investigation? So if you didn't learn anything from the work you did, if you didn't, create any new information or new knowledge, it's unlikely that the tests you were doing were actually, considered experimental and considered shred eligible. If you didn't learn anything new about, what works or what doesn't work, or how to do this application, or, how best to go about solving this problem, then it's probably more so that the work was rather routine in general. So these are the three questions you need to be able to answer. And as I mentioned, it doesn't need to be this like one clean, perfect document that you have going throughout the year and has all this information collected in it. That would be great. That would make my job super easy. But that's not really how it works, and that's not how most companies work. So you need to be able to show this information from any source. Like we say that shred is this puzzle. There's all these pieces in kind of dropped in different documentation, different formats, different pieces, different emails, different meeting notes, different, code repositories all throughout your business. You just need to be able to have those puzzle pieces available for if you do get audited. So that's really the process that you need to put in place. Is you need to be able to answer these questions if the CRA comes asking. So if you're doing work and you're not recording anything about tests, anything about experiments, like your team is doing them, but you have no record of like, we tried this, it didn't work because of X, Y, and Z. We then tried this, we learned, we got a little further in the process, but then we faced this challenge with that. It doesn't need to be like clearly written out somewhere like that. But if you can't prove whatsoever in any format that you did those tests, it's going to be really challenging for the CRA to grant your shred refund if you were to get audited. So if they come asking like, okay, show me what tests you did. And you're saying, yeah, we did a couple tests. And they're like, yeah, no, show me the proof. And you don't have any evidence. That's when you get in the situation of an audit where the claim could get it reduced, where they could say, you're actually only able to get 40,000 instead of 80,000, or you actually could get your entire claim denied if you're not able to provide this proof. So it doesn't need to be perfect, it doesn't need to be clean, but you do need to have these three questions answered somewhere in your documentation. And then kind of lastly, which really ties into the financial aspect, is what resources were used to do all these activities. So if you paid a contractor, what documentation are you showing that that contractor is the one that did that work? I see this all the time where invoices are very, very simple, and it's very challenging after the fact to go back and, testify that this invoice was specifically for this specific work, whereas that invoice was for some routine maintenance. So I would always recommend kind of something you can implement from now going forward is add more detail into your invoices from contractors and implement some sort of documentation or time tracking for your team members, which I'll get into in a second here. So in terms of documentation options, there's kind of two options. The first is building shred into your systems. So this could mean, adding a tracking layer into your Jira, your GitHub, your ClickUp, etc. So being able to tag certain projects within your layers of your code, or within your testing documents, within Excel files, even in Google Drive, creating a folder that's a specific project, and then dropping any invoices or any documentation, Excel files, Word documents, anything into that folder. That will really just keep things centralized. It'll, be able to be really simple at the end of the year when you're trying to identify what work was related to that project. Having that tracking layer kind of built into your systems. Excuse me. And I always recommend tracking employee time and project allocations. This is really the key to maximizing your shred return. So I know in a perfect world, we would have daily time tracking where our developers or our engineers are saying like, I spent 5 hours on this project and then, 3 hours on this task. I live in the real world. I know that's not realistic. I know no one is going to do that. Or maybe you can convince your developers to do it or your engineers to do it for a week and then they're going to stop. So I completely understand. If you choose to do this option, I would recommend implementing biweekly or, at the minimum monthly time tracking. And this doesn't need to be counting pennies. This is more so in this past 2 weeks or in the past month, what percentage of my time was spent on what activities, what tasks, what projects. So on a biweekly basis, you go in every other Friday, you spend 20 minutes. During the past 2 weeks, I worked, I'd say 50% of my time on this project and I was doing these 4 tasks, 20% of my time on this project and I did these activities. The more information you have about what your employees are doing, I mean, in general, it's a great business practice to be able to understand what your employees are spending their time on, but also it's really fundamental, important for Shred. At the end of the year, you need to be able to show what employees spent what percentage of their time on each project in each month. So if you have no form of documentation and no data to track this, it's going to be very challenging at the end of the year to go back and remember, oh yeah, I think like last January, so and so spent 20% of their time on this project. Like if you're just pulling that out of thin air, first of all, you're probably not going to be maximizing your shred return because you're not going to be confident about that data. And second of all, if you are to get an audit situation, that's not going to fly. The CRA is going to say, where's your proof of that number? Where did you get to the number 20%? And if you don't have any documentation or any data to back that up, that's when the claim will get reduced or denied. So implement time tracking, add tracking layers into your existing systems. I promise you the 20, 30 minutes, a week or every other week that this will take will save you hours and hours and hours in the long run, not only for Shred, but also just for financials and tracking. And if you're choosing to raise money, your investors are going to want to see how your team is spending time. So it's really just good practices to put in place. The other option is to use our GrowWise tracking system. So we've built a platform, which I'll explain a little bit more about in a minute here, but we've built a platform that uses automated AI agents to call your team members on a schedule that you set up to record, to ask questions, what's been going on with this project, what have you been doing, what challenges have you faced, and that records that information within our platform. It records, gathers information, and then it documents that all within our platform. So that is actually, substantiating evidence that's recorded in the moment throughout the year of what your team members are doing, what's going on within the project, what challenges have been faced, what tests have been done. So this is a really simple way that we've built into our platform to alleviate a little bit of that, need for the tracking externally. We can automate that within our system. And having this going on year round means very little lift at the end of the year. So if you do use our platform and track, kind of throughout the year, every other week or every week or every month, what's been going on with the projects, that means at the end of the year, we'll pretty much have all the information already to prepare the shred claim with very little lift from you and your team. So that really simplifies the whole process. Okay, so I want to talk a little bit more about Shred for growth and how we can maximize Shred as we scale. I know the kind of point of today was to have some conversations around we're trying to scale in 2026. What can we do with Shred and how can we use Shred to grow? How can we maximize our Shred as scaling companies? So always the key is understanding project identification. This is a common situation that happens as companies grow, is there's things get diluted in terms of shred knowledge. So if only your founders or C-suite are aware of shred and what is eligible and what isn't eligible, as your team grows and as you get more employees, the employees that are doing the shred eligible work are likely going to be the furthest from the C-suite folks. So even if you have one layer of middle management between, a lot of times that just creates such a distance between who's doing the shred work and who's actually aware of the shred, application and what's eligible. So I always recommend kind of getting your team together and just having maybe once or twice a year having a meeting about what shred is, what needs to be tracked, who's identifying the projects and when. Because if you're waiting until someone in the C-suite recognizes that that project is shred eligible, you've likely already missed weeks and weeks, maybe months even of development or of engineering work that were associated with that project before you started, tracking properly. So it's important to understand who is going to identify the projects. The sooner you identify that the project could be shred eligible, the sooner you can start documenting properly, and the earlier on you can start claiming those salaries under that project for shred. So it does end up maximizing your shred claim. The second, as I mentioned, is tracking time. The more data you have, the more shred you can claim. If you have more data, you'll be more confident in your shred. And instead of saying, I think maybe we spent 30% of their time in February, it'll be, no, I have the data. I know they spent 60% of their time, and I can prove that with data. So it really ends up creating larger and more confident shred claims. Sorry. The third here is around shred strategy. So I didn't speak too much about this earlier, but there's different rates for each type of expense within shred. So salaries are the most lucrative. Salaries are able to be refunded through shred at a rate of about 64%. So 2/3 of those salaries can be refunded. So that's assuming, 100% of their time is spent on shred eligible activities. 2/3 of that time can be reimbursed. 2/3 of their expenses of their salary can be reimbursed through shred. For contractors, materials, and capital costs, it's around 40%. So if you hire an employee, pay them 100 grand a year to do development or engineering, and they're working on, shred eligible projects, you'd get a check for almost $65,000 at the end of the year. If you hired that employee or hired that individual as a contractor rather than an employee, that shred refund is going to be about 40,000 instead of close to 65. So it's a huge difference, and a lot of people don't know about this. I'm not ignorant to say that shred is the only variable in the hiring contractors versus employees conversation, but a lot of people don't consider that as a variable in that equation at all, and that's a mistake. It really should be considered. You should think about shred within your hiring strategy and understanding how that's going to impact your shred claim in the long run. And then shred efficiency. So I do see some people, and we talk to a lot of companies that are, maybe not even filing for shred because they think it's going to take too much time, or they're filing shred internally and it takes tens and tens of hours. Their employees are all spending a ton of time on it. I always just, ask the question, is this the best use of your time? Is this the best use of your team's time? Even working with a manual consulting firm where the process takes a lot of time and effort, it's not really the best approach. It's, you and your team should be spending time working on your solution and iterating and, addressing your challenges within your business, not doing a shred application. So the less time you can spend on shred, the better. So a little bit more about GrowWise. That's kind of where we come in. We built GrowWise to address the core challenges that people and founders and their teams have faced with manual consulting firms for years. So a lot of consulting firms, the process is very manual. It's very time consuming. They charge, typically 20 to 25%, and they're still asking the founders and their teams for 10 plus meetings and tons of back and forth. So that's really the pain point we built GrowWise to solve. So we've built an AI-driven platform that simplifies the shred process, saves leaders and their teams time in the year-end effort, as well as throughout the year in tracking. So we do have the functionality to do that automated tracking throughout the year, where our system can call you on a recurring basis. At the year end, we've built some really cool tools to actually be able to, first of all, allow you to dump data in any format into our system, and we'll pull out the parts that are shred eligible just from a data dump. So we have a lot of companies that dump, their Jira files, their GitHub commits, or meeting notes, or, any messy Excel files or jot notes from a notebook. Dump it into our platform. We're able to pull out the components that are eligible and identify the different shred projects. And from there, we do interviews with our AI voice agents, from our AI voice agents to you and your teams, which typically take around 20 minutes. And that's kind of all the input we need from you and your team to prepare your entire shred claim. So we really simplified the process, and we have to offer support, throughout the year if you have questions about tracking. And also, if the claim does get audited, we're right there to support you throughout that process. And we help companies across any size. We have companies that are 2 people. We have companies that are 200 people, really in every vertical, in every industry, and across Canada as well. So, yeah, I'd love to connect. If you have shred questions, if you want, to maximize your shred claim, that's really what we do best. And yeah, I'll open up the floor to some questions now, but I hope that was an informative session for you guys. We've got lots of time for questions. So, yeah.
Thanks so much, Lauren. I learned a ton.